Here today for this session with Republic. I'm joined by Matt Melbourne from Republic, and we're going to be talking about how to invest in public companies and private companies. So public.com is an investing app for investing in public companies. We're currently only available in the US, and we make it possible to buy fractional shares of public companies and ETFs. And we also put a social layer on the stock market, which means you can buy and sell investments and then make comments about them. And in those comments, you can share ideas with others. And so we're here to make the stock market accessible, educational, and fun. And so this is one of our public talk series where we're trying to get conversations about money out into the open. And so thank you all for joining us here today. And we're super excited to hear from Republic as well. General housekeeping, Matt's going to kick off with his presentation, and then I'll do my side. Please enter your questions in the Q&A. We will try to get to them either within the presentations themselves, if not at the end, and we'll save time for those questions at the very end as well. So I think with that, Matt, I would love to have you introduce yourself and get started into your presentation.
Thanks so much, Katie, and thanks to Katie and the public.com team for hosting this and organizing this. Really excited to shed some light on what Republic is and how to invest in private companies. A little bit of background on us and myself. We're an investment platform for regular folks, everyday people, to invest in startups with as little as $50. So we launched in 2016. We've been around for about 4 years, and I lead the investment team at Republic. My name's Matt. So with that, I'll get started with the presentation. So how to invest in public and private companies. I'm going to be tackling the private companies aspect of the presentation. This was a match made in heaven with public.com. You can see our brands look really great together. So we were super excited to kick this off with Katie and the team. Just a quick roadmap of what we're going to cover. I'm going to give you a quick overview on Republic, how the platform works, who we are. I'm going to dive a little bit into what your investing strategy might want to look like for investing in private companies. We'll move to due diligence and how to conduct your own due diligence on the companies that are on our platform, and then some tips and tricks for investing on the platform that will be helpful as well, hopefully. So like I said, Republic is an investment platform for private companies to raise capital and for regular people to invest in private companies. So you'll see here's an example of 3 companies that happen to be raising right now. Important to note, none of this is investment advice, so definitely do your own due diligence. But just to give you a sense, here are 3 companies, one in the food and beverage CPG space, one in the software space, and one in the financial technology fintech space. So and then here's kind of what a deal page looks like for one company called Ample Foods. They are a meal supplement, a meal replacement company. You'll see they've raised about a little over $500,000 from 1,200 investors. So that's it. That's an example of one of the companies that's raising with us. So what is the difference between a private and a public company? So all the companies that you might know today that you might want to invest in, say Google or Amazon or Spotify or Facebook, at one point in time, majority of the country, most people weren't able to invest in them. Only wealthy venture capitalists were able to. So here's an example of a publicly traded company that had an IPO, an initial public offering in 2018. You'll see that one of the interesting things here is the company was launched in 2006 and didn't IPO for the public to invest in 2018. So the majority of their growth was in the private phase, when they were raising from wealthy individuals, venture capital firms, and other institutional investors. So when investors invested in 2018 and beyond, that was through the New York Stock Exchange, listed on the New York Stock Exchange. they didn't get access to that same upside. So Republic was created as a way for regular people to invest in companies before they go public. So the laws changed in 2016 to allow for regular people to invest in private companies. Before that time, it was basically, for most people, impossible to do so, about 94% of the country. So we launched in 2016 to do just that. Here's a quick overview on us. We've run 182 investment campaigns. We have about 500,000 investors on the platform. We've transacted about $115 million in investment on both our open platform and our private syndication arm. We accept less than 1% of the companies that apply to raise with us. We have a really rigorous due diligence standard to provide a really good experience to investors and instill a lot of trust. And we have investors from all 50 states, lots of other countries besides the US too, and our minimum investment size that's most common is $100. So this really is a platform for everyone to invest in private companies. I wanted to start off too with how to approach most broadly investing in private companies. So when you think about investing, most people immediately think about the public market. So investing in large cap public companies that you may recognize the names, some you might not. Facebook, Amazon, Google, those are the big tech stocks that a lot of people equate with investing. There's also a subset called alternative assets that a lot of folks should consider. So they tend to be a little bit riskier, but also higher reward. So a lot of experts say folks should be allocating between 5 and 15% of their investable assets to the alternative space. And one alternative asset is startups or venture capital. So that's where Republic comes in. Everyday person is you can take some of what you have to invest and invest it in private companies. So that number one is investing not investing more than 5 to 15% of what you have to invest in startups or venture capital. 2 would be you really want to have a spread of companies that you'd like to invest in. So at least 10 to 20. And as a platform, our minimum investment size is $50 or $100 each. So it really does allow folks to invest in a whole suite of different opportunities. The reason you want to do this is that startups, private companies are much riskier, or investing in startups or private companies is much riskier than investing in the public markets. These are venture-backed opportunities. Many of these companies aren't profitable yet, and there's a high risk of failure. So it's really important to invest in a big spread, at least 10 to 20, so that having just one of those and having an outsized return of 100x or 1,000x or 10,000x can make up for the losses of some of the others. The idea is you want to invest in a whole spread so that you have one that kind of hits it big, 1 or 2 that hit it big, and make up for some of the losses of the others. So investing in that spread is super important, and Republic makes it easy to do that. One thing I want to touch on too is we actually just created a product called Autopilot for folks to basically put their portfolio and their strategy on autopilot. You're able to automatically build a diversified portfolio. So you can set how much you'd like to invest monthly and in which types of campaigns. And we'll actually, based on those criteria, invest automatically for you to build that portfolio. So you don't have to go in and pick them yourself. So we're really excited about this. You can check Autopilot as a way to build that strategy on your own and get that spread that I'm talking about. And then the third aspect would be you definitely want to do your due diligence on each of the companies on the Republic platform. So the most important thing here is, what's important to know is Republic has a really curated set of offerings. We do our own due diligence. We have a less than 1% acceptance rate of companies that are looking to run a campaign with us. But it still is really important that folks do their own due diligence and evaluate the merits and the risks of each offering on their own. So definitely check out the deal pages like I showed you before for each company. They submit a lot. They show a lot of materials about the company, its background, its traction that can help you make an informed decision about what to invest in. So that due diligence piece as part of your strategy is really important. So I wanted to dive in a little bit there as well. So the acronym that we use and the due diligence framework that we use, we call impact squared. A little bit corny, but it actually is pretty helpful for us internally as a team. You're looking at the investment terms, the size of the market, and what the market landscape looks like, the product, the particular angle that the company has that differentiates it in the market. One internal term that's important for us is crowd and fundability. For the success of the campaign, we say, can this company raise the money that they need to raise in the platform? That's less important to you, but just to give you a sense of how we think about this internally. What kind of traction does the company have to date? So whether that's sales or revenues, month over month growth metrics, we want to see, has the company been able to find people to either use their product and pay for it, and how much and by what numbers are they growing on a regular basis? So traction is really important. And lastly, team. So who is the team behind the company and the product? Are they serial entrepreneurs? Do they have industry expertise? So impact squared, that's the top level look. We're going to home in on 4 of these for this presentation. Terms, investment terms, traction, market, and team. So those are perhaps the 4 most important. For you as an investor on the platform, the first one is terms. So what's basically what you can kind of equate to the price of the offering. One of the most important terms that you want to look at is valuation or valuation cap, which is how much is this company worth, and how much of that company are you looking to invest? How much are you going to own of the company after you invest? So the valuation is basically the price of the offering. You want to pay attention to it. The companies on our platform tend to have a valuation of between $5 and $50 million. And you want to make sure that the amount of revenue that the company is generating makes sense in terms of the valuation that the offering is at. So for example, if a product company, a consumer product company sells, let's say, for example, some sort of food in the grocery store that you might buy at Whole Foods, they do $500,000 in revenue annually, and they also have a direct-to-consumer subscription model that does $500,000. So they do about $1 million in annual revenue. Your valuation should be some multiple of that, say between 2 and 5x, depending on the specifics of company. So if the company does $1 million in revenue, you want to invest. You want to make sure that those terms are perhaps between, in terms of the valuation, are between $2 and $5 million. The second one that's really is the market. So and the market size. So when venture capitalists are looking at a product or a company, they want to make sure that the market is big enough so that if the company hits it big, that the return it could be large enough to make up for some of those losses for the other riskier opportunities. So you want to make sure that the market is large enough where the company can at some point reach $1 billion in revenue, annual revenue, for example. And you want to make sure that when you're evaluating the opportunity, that there's a market for this, for the product and the company, and that it's large enough to make a sizable return. So the key question is who's going to buy the product, how many of those people are going to buy the product, and what percentage of those people does this company think that they can capture as customers. The third would be traction. So talked a little bit about this in my last slide. You want to look at the company's sales or revenues, or if they're, for example, a user app and they're not generating revenue yet, you want to see how many downloads they have, how many accounts have actually been made, and you want to look at engagement metrics. So you want to see how many of those users and how often how many of those users are using the product on a daily, weekly, or monthly basis, and how quickly is that product growing. Is it a viral product? Is it growing more steadily? Traction is super important. Other things to consider there are partnerships with major industry players or incumbents, prior fundraising. Has the company raised from other venture capitalists or angel investors, names that you may know or names that you might not? These are all things to holistically consider under traction. And then the fourth would be team. So who is the team behind the product in the company? Are they serial entrepreneurs? Have they built a company from a small company and then gone and sold it to a company like Google or Facebook, or had it IPO and have an initial public offering where you can now invest on it on an app like public.com? That's one thing. Two is, do the founders have industry expertise? Are they healthcare professionals? And is it a healthcare company? And do they have particular expertise in that space? These are the types of questions that you want to ask when evaluating the opportunity as well. So those are the four most important when you're looking at a company on the platform. The last thing that I'll close with are some tips and tricks when making investment decisions and how to use the Republic platform. And the way that we've designed it is to make it super user-friendly. So one, we have a section on the deal page that shows the investment opportunity called the discussion section, where you can actually ask questions to the founders of the company and say, hey, can you provide more color or more detail on this point? And the founder actually can respond to you, and you can see what everyone else is writing as well. It's a really useful way to get more information, ask clarifying questions, and ultimately kind of see the responsiveness of the founder in responding to those. So we encourage the founders and the executive teams to be really quick to respond to help our investors make decisions. The second tip would be to use the follow feature on the deal page so that you can receive email notifications when the founder posts what's called an update. So during the course of a 2 or 3 month investment campaign, the founder or the team may have some really exciting updates. A company may have closed a major enterprise deal with a Fortune 50 company, or they may have secured other private financing from a major VC, and they want to or have to, in some cases, write an update to their existing investors in the campaign and anyone that's following their deal page to let them know that it's really important to follow them so that you can see those updates during the campaign that will help shape your decision in terms of if you'd like to invest or not. So it's a really useful feature. And third, this is a little bit of an insider trick, but it's important to kind of skip to the company's traction section when you're first evaluating the opportunity to get a sense of the stage. So you want to see, is this company revenue generating? Are they in market, or is it a beta product? Are they later stage, or have they raised tens of millions of dollars and are already seeing substantial traction? And the answer to those questions will help determine how you want to look at the opportunity. Looking at a pre-seed, early stage, pre-revenue opportunity and evaluating that is very different than evaluating a later stage opportunity with more traction. So that's my third tip, is skip to the company's traction section to get a sense of the stage, which will help shape your thinking about creating a framework to think about any particular opportunity. So what we went over today was a quick Republic overview, investing strategy in private companies most broadly, doing your own due diligence, and then a couple tips and tricks on how to use the platform specifically. So it's been great to go over this with you guys. Our site is republic.co, republic.co. Republic.co/autopilot is where you can set up that auto invest feature. And then if you need to reach out to me or the team, reach out to team@republic.co. And that's it.
What does that look like? Is that cut off again?
Nope, all good.
Okay, thank you. All right, we'll get going. Okay, so again, the pictures we see here maybe don't look like us, but that's all changing. So there was recently a Pew study that came out and really was a good snapshot at who's actually investing in America. Right now, about half of US families are investing in one way or another, usually through a retirement account. There's been a rise in brokerage accounts, which I'll get to shortly. But as you can see, we still have a ways to go in terms of democratizing access to investing in the public markets. I think historically, not surprisingly, but unfortunately, fewer people invest who are women, fewer people of color invest, and you are less likely to invest by income level. And under the age of 35, 41% are invested, which is somewhat expected. If as you're at a younger life stage, you might not have the means to start investing. But what we have seen lately is a surge in this new generation of investors getting into the market. And a lot of that has to do with the recent volatility we've seen in the market. And so we like to show this long-term view of the stock market because I think when we're in the day-to-day of things going on, it can feel very doom and gloom. I think we are in a very strange time and nobody knows what's going to happen. Here on the screen, we actually recently talked to a few financial advisors to get their perspective on this, since we're not experts ourselves. So we pulled some experts and they all kind of said the same thing. Nobody knows what's going to happen, but what's helpful is to look at the long term. And in the long term, the stock market has returned 10% to investors annually on average. Now that's across the entire Dow Jones Industrial Average. It's not, guaranteed for a specific stock, but over time, the market has been very resilient. And even in the past few weeks, it's been wild seeing this sort of rush towards interest in investing in public companies. As Matt was talking, I just was browsing an article that said business and financial information and news content is up 42% year over year. And it's the fastest growing segment of media there is. And so just given the volatility, there's this wave of interest now in people, a lot of young people really interested in learning more about investing in the stock market and more in tune with business news, which is really interesting. I get personally a little uncomfortable when I see headlines like the coronavirus gold rush, because I think we all know that it's a very dire situation out there for a lot of people. But what we're seeing is this kind of wave of interest. And this last headline here, we actually just released a new feature called Messages, which makes it possible to have side chats about investing with your friends in the context of your portfolio. And the reason why we launched this was we saw this surge in engagement on our app in the past few months, especially. And we really attribute that to the fact that when things are uncertain, our hypothesis is people don't necessarily want to go it alone. They don't want to be alone with their charts and numbers, and they're looking to collaborate with other investors. And that's exactly what our platform allows for. So at Public, we say everyone's an investor. We even TM'd it. It's that important to us. And that's reflected into all areas of the business. We just raised a funding round. And some of our backers were Will Smith, the Girl Boss CEO Sophia Amoruso, and even NFL star JJ Watt. And so harkening back to those pictures of what does an investor look like, you might not expect this group of people to be investing in a company like ours, but they are. And we really believe that's because investing is becoming a mainstream thing. And that's something we're embracing. We want to give more people access to investing in public companies and make the experience more accessible. And so we're here to make the stock market inclusive, educational, and fun. Before I dive into what our platform does, there's a couple of kind of trends that really lead to what we're building. The first is this idea of the drop to zero commission fees. In the 90s, you had companies like E-Trade come out, and there was a lot more competition in terms of places where you could invest. And because of that competition, the commission fees for trades slowly went down over time, to the point where we reached a tipping point in the last 12 to 18 months where most brokerages, even the old school guys, have dropped to zero. That's great. We love that. We also are a zero commission platform. We think that just makes it more accessible. Oops. The next thing I want to talk about is this idea of fractional. You've probably read about fractional shares. Pretty basic concept. It used to be that if you wanted to buy one share of a stock in Amazon, for example, you had to have the money for that entire share. And so the challenge with that is for a high flying stock like an Amazon or even an Apple, a Google, the prices have gone up to the point where now for many people buying one share isn't accessible. You might not have $2,000+ in your bank account to invest in one share of Amazon. And so the notion of fractional shares is sort of like bringing this concept, an Uber pool type concept to investing. So what happens here is a brokerage like Public will use technology to break those shares into small pieces and make it possible for people to buy a slice of a share based on a dollar amount. And so if I have $10 I want to invest in Amazon or Apple, I can do that on Public and I'll own a fraction of a share. This is really good for people starting out. Some people, think, oh, I need $10,000 to start investing. You don't need any minimum to get started on Public. If you have $20, if you have $100, with fractional, you can kind of get your feet wet and build a little mini portfolio with fractional shares as a way to begin your learning journey. And we see a lot of people doing that in the platform. So the big differentiator for us is we are a social network meets an investing platform. And so we provide a social layer on the stock market and make it possible for you to talk about why you invest and share ideas with the community. And all of that's built on this technology that makes it possible to buy shares fractionally. And I saw somebody in the chat had asked if we would be expanding globally. Not now would be the answer, but we just started launching in our initial state in September. And so we're still, getting there. But for now, we're only available in the US. So here's what the platform looks like. What I love about the onboarding experience is it's immediately optimized to make things feel familiar, especially if you've never invested before. And so one of the first things you do when you join Public is you pick a few things you're interested in. It could be personalities, it could be brands, it could be industries, but you pick a few of those and we'll build a feed for you to kind of welcome you to the experience. And so Shaquille O'Neal's on the platform. Maybe you want to see what he invested in, so you can pick him and start following him immediately. Maybe you're into sustainability stocks, and so if you pick that one, we'll suggest some companies to put on your watch list. And all of this creates this experience where from day one, you can kind of see what other people are doing and get acclimated before you ever take action. And what all of these kind of inputs form is a social feed on top of the stock market. So your feed will be activity from people you follow. You'll see news headlines from the companies you invest in or want to watch. And you can have a passive experience where you're learning on a day-to-day basis without needing to actually do anything in your own portfolio. I'm personally a long-term investor, and so I'm not necessarily moving things around every day, but I learned so much just going through what other people are saying and how they're talking about their own investments. And so we make it really, really easy to invest in any stock with any amount of money. So here you can see on the interface, you invest in dollar amounts. And so it's just optimized for how people think about their own money. We don't think about our money in share prices. We think about it in amounts. And so you can select a predetermined amount, you can select a custom amount, and in a couple of taps, you're invested. The best part of this is this step where we ask you why you invested. Now, you don't need to do this. You can choose to be completely private on Public, which is kind of an ironic way to think about it, but there's definitely people that do that. But this prompt really unlocks access to understanding why people make the decisions they make and gives you the ability to articulate why you believe in this company and gives the community the opportunity to learn about your own thought process as an investor. So just like Matt shared kind of how to think about investing in private companies, this step helps kind of people explain the why behind their investments so everyone can learn. We also just last week announced group messaging. And so this is really interesting in that you can build little pods of conversations around specific topics. I might have a group around Pinterest because I really believe in that company, and I can bring in other people who share that mindset and we can share information. There's also, if you have a college investing club and you want to bring the conversation closer to where you invest, you can create a group there. And groups can hold up to 100 people. And the cool thing about groups too is it's a messaging experience that's optimized for investors. And so I think if you invest in public companies now, you might have the experience of screenshotting a chart from somewhere, putting it in a text. I actually have a thread in Instagram right now with investing things. So these conversations were already happening. We're just bringing them into a place where it's closer for you to reference the actual information around the stock and also be able to take action within the same place. Another unique aspect is the community of investors that we've attracted. It's a broad range of people across many industries. And with this collective brain power, you can really learn a lot about different companies. And so if you're watching like a financial news outlet, you'll have a lot of people who are experts in the business world or experts in the public markets, but maybe they're not an expert in a specific space. And so we believe that everyone has expertise in some area. And so we're building this broad coalition of people whose, when their ideas come together, it's really powerful. So as an example, if I'm Katie here and I have a background in marketing and I really like Pinterest, and I also, believe in Peloton as a company and think the recent momentum they've seen is powerful. And maybe I also invest in Beyond Meat. In a traditional experience, I would just be kind of alone with my own opinions in my own portfolio, unable to collaborate with other people. What public does is it allows me to connect with people who have different areas of expertise. And so I'm friends with somebody in there who runs product at a streaming media company. And so if she invests in Roku, I'm kind of listening a little more because that's her world. Different than insider information trading. This is purely, expertise in a certain space and the ability to share information. Same thing, I have a friend who works at the Mayo Clinic in healthcare. That's something I don't know anything about personally. And so I can kind of collaborate with him in that area. I have another friend who works in data analytics. Same thing. Maybe, my former roommate is a luxury fashion designer. And so when she's doing something in public with a company like The RealReal, which is a publicly traded online consignment shop, I'm listening to her because that's her space. And so you can see how the collective brain power becomes a very powerful thing at scale. In terms of the nature of the conversations in public, I always like to kind of show what they look like, because I think sometimes when you think of a social feed on top of investing, you might go to a place where you're thinking it's people trying to influence other people to buy certain stocks. That's really not the case across the majority of conversations in public. What you do see, because of that prompt asking you why, is people candidly and transparently explaining why they're investing in something and inviting other people to join the conversation. So here's an example. The other day, I invested in this gaming ETF, and I explained that in concept, I believe personally that gaming is a growing space, but I also know I don't know everything about it, and I definitely don't know enough to pick individual stocks. So I was just getting started dipping my toes into gaming with my investment. And from that, I got so many comments asking questions about why I made that decision. I got some, people who know a little bit more than me recommending certain stocks. And that kind of helps me think through for next time I have a learning moment. And everyone who participated in this thread shared in that learning moment. And so at a high level, not investment advice, but teamwork makes the dream work. We all aren't experts in everything, but if you think about the people in your social circles and your friends, colleagues, when you kind of bring all those brains together, it could be a really powerful thing and could help build financial literacy, because it's not just, there's the part of investing that's learning the terminology and how it works. And then there's the part of really digging into specific companies and industries. And that's where bringing different voices in can really help you grow in that area. Another feature of the app is something we call themes. That's where we curate stocks based on interest areas and personal values. And this is just, again, a way to make the stock market feel familiar and accessible for someone who's not in the weeds. When we're living our lives, we don't look at something and think, oh, that's XYZ sector. No one really thinks of life that way. We think of it in terms of the things we care about, our values. And so with themes, it's really a way to pop into different areas and explore what's valuable in those spaces. There's always companies I come across in public that I had never known they were public companies before. And because of themes, I can kind of explore in that capacity. And so another key point here is that we're really building an investment platform for everyone. I think there's many platforms on the market now that are catered to a more specific audience, that being more of a trader. We kind of realize that, you know, trading, investing, they're kind of similar, but they're different, and they're also not binary. People can have certain companies they invest in long term. They also might dabble in shorter term trades with other companies. And so we're building something where all of these people can coexist and the experience can fit for you, whether you are all the way on one side trading or all the way on the other side investing, or maybe a little bit of both. And I think we're seeing a lot of people are kind of more so in this middle area of, I own some things long term, but sometimes I get in on shorter term things, and that's interesting to me. And so what Public is built as a way to kind of do both at the same time. One of the final things I wanted to show is this idea of a public portfolio. And so if you choose to be public on Public, you will get a vanity URL. That's my page there. And you can actually see what I invest in. The dollar amounts here are the share prices. And so when you're sharing your trades or you're sharing your public portfolio on Public, it's never shared the actual positions you have, just the fact that you've invested. Another way to kind of level the playing field, if I invested $100 in Shopify, my page would look the same as somebody who invested 100,000. And that kind of puts everyone on an equal playing field in the platform. And another cool thing is that if you're a member of Public, you get your own specific share link. And if you invite your friends to become investors, you can earn slices of free stock as well. And so you get rewarded for bringing your friends on the journey with you. So with that, I'll wrap things up. I would love for you guys to try out Public if you're in the US. I know we have some international people here, so we'll have to wait on that. But if you want to give Public a try, we always love hearing feedback. We build Public for you. And so download the app, give it a whirl, shoot me a note and let me know what you think. We have swag kits that we're sending out. So I would love to send you guys some fun Public swag. And here's my contact info. Let's definitely keep the conversation going. Okay, let's see. We had any questions pop in? I saw the screen blinking. Matt, here's one for you. Is there an app available for Republic? What's the experience of using Republic? Is it desktop app?
So we're a web app for right now. We don't have an iOS or Android mobile app just yet, but I definitely encourage everyone to sign up, which will subscribe you to our newsletter, and you'll get any notifications if there are any changes there. So for right now, if you'd like to invest, just go to republic.co and sign up, and then you'll get the news if and when the mobile app does come.
Great. Thank you for reiterating. I just saw that you had also answered that in the chat, so sorry about that. Popping in the Q&A. This might be for both of us, but I can take a first swing. So we have a question.